We start off with the chief executive of AMEC, a UK engineering company. We'll take a listen to his views on the industry and the recovery.
Well, definitely the 2009 has been maybe one of the most difficult years for the industry in many, many years or many decades. 2010 is going to be equally challenging as 2009, but what we see is that a number of signs for a recovery. The question is always the extent of the recovery and, of course, the timing of the recovery.
Difficult because people are spending less, because some of your projects are going on hold, or because costs are going up?
Definitely, let's say, when you come to oil and gas prices or commodity prices, if they fall down, that means the returns for our customers is going to be less, and that will be holding them to make a major investments. That's most of the time the reason for why, let's say, they hold back on investment.
We've seen so much volatility on the energy prices over the last couple of years. Do you see this volatility continuing into 2011?
On a long-term basis, I mean, every analyst or forecaster will say that the energy prices are going to go up because we have achieved maybe peak oil in 2015, and that will be more difficult, let's say, to continue exploiting natural resources in the same pace as we have been doing in the past. But on a shorter-term basis, definitely we will hope that we will not see the volatilities of oil prices going up to $140 and going down to $40. But what we see the last 3-4 months is quite a good confidence in the energy prices. We see them stabilizing at around 70 and now creeping up to the 80, which is a good price actually for everyone.
When do you expect the recession to be really over? I mean, you're exposed to various markets, the US, the UK, Europe. Which is the one that does seem the most stable in the coming months?
I mean, it will be very difficult actually to make an assess that, because if I would be able to do that, then I would be making a lot of money. But it's very clearly what we see in the market today is that countries like China and some countries in Asia are having a faster recovery than what it is maybe in some other places. In the US, because of their culture, they tend to go down to the bottom of the problem and they try to grow up and pick up a little bit faster maybe than Europe. So I see that, so Asia coming fast, US or North America is number 2 and Europe number 3.
And of course we have so many doubts on Greece. I mean, this must weigh also on the projects because investors are maybe more weary to spend on the longer term. Does it? Do you have conversations with certain clients that say, well, actually, I'm not feeling too confident at the moment because of all the sovereign debt issues?
Most of our clients are actually the large, I would see, the international oil companies or the large national oil companies, and that's where Greece actually doesn't fit in. So they're quite bullish about, let's say, the future fundamentals of the business, and therefore they continue the investment. Greece definitely changing, let's say, the capital confidence in the market, and of course it has some effects on that.
Does it make your financing more difficult? Is it more difficult for you to borrow money?
I don't think so, actually. I mean, we have been managing our cash portfolio very well. Today, we have a cash at about more than 750 million pounds, which is one of the strongest positions in the market. And I think for our type of business, this presents a number of opportunities for us to grow the business further than what we have been doing even in the last years.
By organic growth or by buying up companies?
Both. 2009 has been a very difficult year for everyone. But actually, versus many of our peers, reality is that we have been able to catch up quite a lot of good market share from many of our peers. But going forward, we'll be seeing maybe on a short-term basis, we'll be seeing modest organic growth before we come to the midterm, which is 2011 to 2015, where we see the organic growth coming back online as we used to have in the past. So therefore, it is even very important for us that we're using and utilizing the cash which we have much more efficient than we did in the past.
This is buying up companies. I mean, what kind of company would you be looking to buy, what size, and especially what region?
We would like to gather more capability in the terms of nuclear, water, mining, underground mining, and also oil and gas activities in terms of subsea activities. In terms of geographies, for us, Australasia is a very, very interesting market because it will be quite good business coming up for us there. Brazil is going to be very interesting, and also Middle East continue to be very exciting in the oil and gas business.
So out of your 800 million in cash, how much are you willing to put in an acquisition?
Well, we have said that we have been now using roughly about 120, 130 million pounds a year in the last couple of years, and we said that we are going to accelerate this number in the coming years.
Mr. Brikho, if you've changed quite a lot since you've come at the helm of this company, if I speak to you in 5 years, at the moment you have 3 major units, you're present in very different countries. In 5 years, what is your company going to look like? Bigger, smaller, more focused, more geared towards the emerging markets?
In last December, we presented to the market our second phase of our journey of AMEC. And the first phase was 2006 to 2010, which we needed to cut down the waste and get the efficiency of the organization. 2010 to 2015 is about the growth. So there's a question of yours, where do we see the company in 2015? We see AMEC a very focused company on the oil and gas businesses, in water business, in clean technologies, in nuclear business and environmental services. Very clear, very focused. But what we are trying to achieve, we're trying to build the best army of engineers in the world, the best army of project managers in the world, because that's where we can create the biggest value to our customers.
So do you think we're still in a possibility of a double-dip recession? And would this be because we, for example, remove the exit plans too soon?
Well, there is a number of theories. I'm not an economist. I'm a good engineer. But what I read and what I understand from the discussion which I have in the market, there is always a fear for a second dip. It not necessarily mean in every country in the world, but it can mean in some certain regions, whether it is like East Europe or Greece, or what we have been seeing in Spain, and maybe partly what we've been seeing in the UK, could be more affected than some other countries in the world.
Are you very concerned about the dip that we saw in sterling over the last couple of weeks? It does seem that we may see parity with the euro and the pound. This is going to affect your business.
Well, of course it affects our business, but most of our business, we are doing the business locally where we're doing the business. So that means at the end of the day, even if we are reporting in pound, it's a matter of translation rather than a matter of hedging. But I am concerned, let's say, if I see the sterling going down, because that is not a good sign for the economy, and I would love to see a strong economy and a strong pound.
Sir, can I also ask you, I mean, you say you're a good engineer, what drives you to take care of this company? Do you have an emotional attachment to it?
Well, without passion, you can do nothing. I'm very passionate to what I'm doing. I love the companies. I love my teams, which we have been building up. And I love the passion of excellence, being impeccable in our delivery, because I believe if you are excellent in what you're doing, you can make a lot of money.